Welcome back to the macroeconomic numbers that is just hitting us, and this is a good set of numbers. The CPI for the month of March has slowed to 5.66%. The CNBC-TV18 poll was 5.63%, but the important part is the month ago, 6.44, fallen all the way to 5.66, and clearly it is driven by food inflation, which has fallen to 4.79. If you remember, last month we were at 5.95, so that's a substantial fall. We must remember that both the headline inflation and the food inflation have fallen because of a very high base. March of 2022 was 6 days into the Ukraine war, which started on February 24th. So we did see very high prices of edible oils and cereals in the month of March 2022. So in comparison, we were always expecting a fall, but this is, as expected, a very good CPI number at 5.66 vindicates the Reserve Bank stand that it may be well worth a pause to see how things are going. Now, to give you the internals, the cereals prices have clearly fallen from an index of 175 to 174. So it's a fall of about 0.5% to 0.6% on cereals month on month. So that's a fairly significant number. Milk products is the one that's still continuing to drag higher. So that is up by a little less than a percent. It's about 0.7% in terms of rise. Edible oils have fallen sharply, and fruit again is more expensive slightly. Pulses have gone up a tad, and sugar is flat actually. It's even lower. Let's see if we've got anything on housing. Housing remains a little unchanged from last month, no change at all. So we'll have to wait and see what else. Personal services, in which gold is included, that has gone up a bit by about 1%. So that again could be the reason why you are seeing it at 5.63 and not at probably 5.5 inflation. Let me tell you the YOY growth. YOY cereals are still higher at a 15% inflation. So you must remember that we are still comparing it with higher on an average. Milk is the one that's still showing a 9.31% rise. So year on year, that one is the culprit. Fruit is up 7.55%. So what's working in favor of pulling down the inflation? Vegetables. That's minus 8%. Meat and fish minus 1.4%. The prepared meals is still fairly strong. That's up 7.6% year on year. The month on month prepared meals is flat. Slightly higher, if you please. So those are the elements in food inflation, which is still stronger. To come to the miscellaneous or the services are rising at 5.77. So my sense is we may see core inflation slightly lower, but I will leave that to the experts. Joining us now, Abhishek Upadhyay, the senior economist at ICICI Securities PD, Aditi Nair, chief economist at ICRA. We are also going to be joined by Nikhil Gupta of Motilal Oswal, Rupa Rege of L&T Finance, and Siva Kumar will join us in a minute from Axis Mutual Fund. But Abhishek, first to you, 5.66, a little higher than you thought, but what did you make of the internals?
Yeah, Lata, so we thought a number, something like 5.43, so slightly higher, but broadly in the same ballpark as implied by the RBI's inflation fan chart, which they revealed in the monetary policy report. So therein they were predicting about 5.6% print. So this number has come in line with that forecast. So not a big surprise. The market was also working with this kind of number also, I believe.
Yes.
Second, in the details, as you mentioned, cereals index, falling is a good news. This is a confirmation that the kind of rise we had seen in Jan-Feb was more frictional rather than something which looked durable, and RBI has rightly faded that increase as well when formulating their forecast for the current year. Third, it looks like core inflation has also slowed down. So,
yes, I can give you that number. I was going to interrupt you. We have a number from Cogensis, which is 5.8%. You will have to do your own calculations, but that one says the Cogensis number is 5.8%, versus 6.1% in February. So does that square with what you were expecting?
Yeah, so there was favorable base effect, but still, if you look at the sequential momentum for core, which is what RBI would wish to track, it seems, I mean, if you take the average of Jan and March, Jan-Feb March period, it is slow to something around 5.4, 5.5%. So it is lower than what the headline core inflation has been, which is closer to 6%.
Okay.
And I mean, even the YOY numbers should come down in subsequent months. So. Overall, a good set of details, I would think. Not a big surprise, but that is good news still.
Okay. I'll just read out a few more details before I go to the other experts. The Jan-March average now works out to 6.2%, and the full year inflation number works out to 6.7%. No surprises there. The core inflation, like I told you, is 5.8%. Milk product index is still rising month on month as expected. We all know the April 1st and the March 1st announcements by companies like Amul. So that's up 0.6% on the month. And like I told you, about 9.5% year on year milk price inflation. The others have not risen much. The fuel and light index is unchanged. Clothing and footwear index is up 0.3. That's hardly anything. Housing index is unchanged. The food beverages index is up 0.2% on the month. Oils and fats are down on the month. Pulses is down 0.4% on the month. Vegetable index is up 1.7% on the month, but that's a seasonal thing. And cereals and products index is down 0.4%. So largely, food price index is up just 0.3% on the month, largely accounted for by milk and fruit. That's the big numbers coming in from CPI. I'm still awaiting the IIP numbers. Rupa Rigir and the others are also with us. Rupa, your first thoughts on CPI?
This is a good number, though this time, food inflation has not contributed to easing of this. But, we had seen that in the month of April, there were sharp upward revisions in electricity tariffs and, milk prices were further raised and all. So, I just doubt about its sustainability. Of course, base effect is going to become increasingly favorable. But sequentially, we have to see how the momentum.
Okay. I'll have to quickly run through everybody because the TCS press conference is about to begin. Aditi, very quickly, your thoughts as expected?
Slightly lower than expected, Datta. We were looking at a 5.8 number, so this is a pleasant surprise. Looking ahead, I agree that the base effect is pretty positive for core inflation because the big uptick in services prices that we saw after the lockdowns were lifted and, life got back to relatively normal. Those will come into the base pretty soon. So I am also expecting that the services inflation numbers should start wearing off because of the base effect.
Okay.
As far as the heat wave is concerned, I'm a little more worried because we could suddenly see vegetable and food prices climbing very quickly to the summer month prices, and that could be interesting.
All right, got it. IIP numbers have come in at 5.6%, which is better than the 5.3, which our poll threw up, marginally better, otherwise on expected lines. Quickly, Siva, are you expecting any reaction on the markets at all, or you only see yields going down a bit?
No, Lata, I think this print is almost bang in line with market expectation of 5.7%. So there is really speaking no major shock. What is, I think, good is that this seems to be an across-the-board softening of inflation. So this is not led by some particular one sector, which should give a lot of comfort to the RBI. And I also agree with all the other panels who have noted that base effect, which is going to be very favorable going forward. So we should see the next print come below 5, perhaps the next couple of prints come below 5, which would give a lot of comfort to the RBI from a policy perspective. Obviously, they know this.
Okay, below 5. Nikhil, would you agree to that? Below 5 is what you're expecting next few prints?
Yes, Lata. Hi. Yes, we are also expecting slightly below 5% for April. We were expecting 5.8 for March. It has come in slightly better at 5.66, as you mentioned. But yes, we expect it would be below 5% because of the base effect. April, remember last time was 7.8%, which was some 100-month high.
Yeah.
So yes, we expect it to be below 5%. Not only in April, but we expect it to stay there for the next few months.
All right, ladies and gentlemen, I will have to thank you on that note because we have got the TCS press conference starting. But I think it's come in as expected. I think there's precious little to add. Inflation number coming almost bang in line with street expectations. And the consensus view is that we're going to see it fall and we will see below 5% prints in the next few months. Thank you very much. It's good news on the CPI front. And let me cut across to the TCS management who are addressing the press.